So, you're watching this video because you're interested in learning more about the offset mortgage, and more generally, reducing your mortgage interest costs and paying down your mortgage faster. If that sounds about right, and you're still using the traditional mortgage setup, then this video is for you. This lesser-known mortgage solution has the potential to save you hundreds of thousands of dollars in interest and help pay off your home years sooner. It's called the Manulife One, and no, it's not as complicated as people think. I will preface the whole video by saying that this mortgage structure works best for those who are spending less than 40% of their take-home income on their housing costs. Not to say that this won't work for others, but for ideal results, that is the ideal cash flow. So, let's start with the problem. The traditional mortgage model is outdated. You get your mortgage from the bank, you make your regular monthly or bi-weekly payments, while your checking and savings account are completely separate. Meanwhile, your income sits in your checking account doing nothing while interest racks up daily on your mortgage. Of course, the bank loves that because that setup earns them more money, not you. But what if there was a better way to structure your cash flow? A way where every dollar you earn works to reduce your interest costs the moment it hits your account. That's where the offset mortgage comes in. While it's been popularized in the UK and US for years, very few Canadians are utilizing it. Instead of separating your accounts, the offset mortgage structure combines your mortgage, checking, and savings into a single account. Your income goes into this single account, and here's the magic. Every dollar in that account immediately reduces your interest charge on your mortgage. You're not making extra payments, you're not locking up your money, you're simply reducing the interest calculated daily automatically. It's true, this is not your parents' mortgage, unless your parents are extremely savvy borrowers, but that's because this is not your parents' economy. Your taxes are higher, your cost of living is higher, and your home prices are much higher. So, you might be thinking, this sounds complicated, but it's really not. If you've ever used online banking, you can use the Manulife One. You still have a debit card, you still pay bills, transfer money, invest, and spend the same way. You're not giving up control, you're gaining it. Because now, instead of making mortgage payments and waiting 25 years to be mortgage-free, your income is working harder for you every single day. Mortgage interest compounds daily, so reducing your balance, even temporarily, creates compounding savings. You'll have access to your money at all times, unlike with lump sum mortgage payments or locked-in prepayment options. And you gain flexibility. If your income fluctuates or you want to pay down more aggressively one month and scale back the next, this product adapts to your lifestyle. Let's look at a couple case studies. Our first borrowers are young professionals who just bought a home in Mississauga and now have $1 million mortgage. Their household income before tax is $290,000 and their total monthly expenses outside of their mortgage payment are about $7,000 per month. This includes groceries, transportation, childcare, going out for dinner, everything. They were approved for a traditional mortgage at a big bank with a competitive rate, and they were happy without knowing something better was out there for them. With this big bank mortgage on a 30-year amortization, their interest costs over the lifetime of the mortgage would be about $730,000. Enter the offset mortgage. Our young couple instead set up a Manulife One account for their new mortgage and started depositing all of their income directly onto the mortgage balance. This savvy move cut their amortization down to 15 years and saved them more than $408,000 in interest. Not only were they saving an incredible amount of interest, but their mortgage was paid off in half the time, which put them closer to purchasing their next property and a comfortable retirement. Our second case study features a single borrower with good income and a smaller mortgage. She works for a big tech company and has strong income and upward mobility, but she's concerned that the interest she's paying on her mortgage is keeping her from getting ahead financially. So proactively, she makes a big move and refinances her mortgage into an offset structure. In this scenario, we are looking at a $500,000 mortgage, her after-tax take-home income is about $9,000 per month, and her expenses other than her mortgage payment are about $4,000 per month. This mortgage would traditionally cost her about $365,000 in interest over 30 years. By switching her mortgage to a Manulife One, she's going to save about $225,000 in interest and have her mortgage paid off in just 11 years. All of this just by breaking from tradition and looking at her mortgage more strategically. Now she is happy that her money is working for her around the clock and she still has access to her cash when she needs it. Now, as I mentioned earlier, this mortgage structure is not for everyone. But if you have strong income and money sitting in your checking account at the end of the month, the Manulife One is undoubtedly one of the most powerful tools available to help you build wealth while paying down your debt. It's not about chasing the lowest rate, it's about building the smartest structure. I help strong borrowers in Canada structure their mortgage using advanced tools like the Manulife One to save money, reduce interest, and create flexibility for their future. If you'd like to see results tailored to your specific financial situation, book a strategy call with me. I'll run the projections, show you the interest rate savings, and help you decide if it's the right fit. Click the link in the description for a short pre-qualification and access to my calendar, and I look forward to chatting.